What we're talking about today is these escalating trade tensions between the US and China. And I know you've been crunching the numbers and doing some research into this. You say this could result in a dramatic repositioning, a change in oil flows, particularly into Asia. Talk me through it.
First of all, it's $12 billion that China bought of U.S. crude worth just in June. It's 12 billion per year. So that's already a significant part of the trade relationship between China and the United States. Now, in terms of oil volumes, that's 500,000 barrels per day of crude that China was buying from the U.S. as the world's largest buyer of U.S. crude. Precisely what U.S. exporters are trying to do is to gain market share in China and in Asia as the fastest growing market. Yes, there may be ability of U.S. producers to start placing those supplies into other countries like India, but India over the weekend also announced some tariffs on some U.S. goods. So it's only a matter of time to see whether those tariffs start affecting the ability of other countries in Asia to start importing U.S. crude as well. So this is not leaving the U.S. producers in a very comfortable position, especially when they try to look for a market. And it's not leaving the Chinese in a very comfortable position either, because they're having to find replacements for that U.S. crude. Sinopec themselves have been so keen to rely on the U.S. as a secure supplier for the long term. And here they find themselves in a situation where they might as well not cut Iranian imports because they seem more secure than U.S. supplies.
So how is all of this impacting sentiment in the space, and in particular prices? Could we see oil move higher from this point on as a result?
If you look at the relative price of Middle Eastern crude compared to the price of the crude that is exported from the US, then you start to see an effect of this. The strength of that Middle Eastern crude is a lot higher. On top of that, we saw that Saudi Arabia, as you just said, is supposed to increase production, but we're not seeing that increasing output materialize. In fact, the kingdom's output fell by 200,000 barrels per day in July, so relative to June. So the market is getting tight in that segment, and as China starts looking for alternatives to U.S. crude in the Middle East, that is also going to support the price of Brent, especially relative to the price of WTI.
Still watching? Perfect. Click here to watch another great video from CNBC International. Oh, and don't forget to subscribe. Thanks for watching.